Why would anyone want to buy bonds that are long maturity in a country that uh, has no chance of paying that off whatsoever? I mean, they're choosing inflation over austerity. They created $500 billion in the month of October. It took us almost 200 years to do that the first time. That's 6 trillion per year deficit. So yeah, we are on an unsustainable path, and I think that is the reason that you're seeing China at the same time they're buying record amounts of gold, in fact doubling what they, in fact much more than they bought in 2022. It's not about return on your money, it's return of it in a system that is at the late stages of its run. And that's why it's not about at this point making all of this money. It's about keeping what you've worked so hard to obtain and removing it from all of this inherent risk. That the hardest part for me, and maybe it is for you too, Chris, I mean, you and I have gone on walks and talked about these things, and we both bear the same cross, so to speak, the burden of being early, seeing things clearly in our mind. That's early. But
in today's episode, Andy Schectman, the CEO of Miles Franklin, dissects the recent gold price surge, attributing it to a global pivot from treasuries to gold as countries embrace de-dollarization. Andy explores the intricate dance between short positions held by commercial banks, commitment of traders' reports, and the rising interest in precious metals amidst a backdrop of dollar weaponization. As gold touched a record-breaking $2,150 on Sunday night, the conversation delves into the potential consequences of this trend, touching on the significance of owning physical gold and silver, countries selling treasuries for precious metals, and the evolving role of blockchain in ensuring transparency for emerging currencies. If you're into commodities, this video is for you. Make sure to like, subscribe, and turn on notifications so you do not miss out on our daily videos. And check our pinned comment for some very special sign-up bonuses with our official partnership deals. Let's get into the video.
Of the real value of gold and silver, where the derivative is controlling the price rather than the other way around, I think it will be more of the same. However, the problem is with this whole thing is that for a very long time, there hasn't been much in the way of any competition in terms of standing for delivery or real drive to buy precious metals. It's interesting that they've gone as high as they have in the face of rising real interest rates. But this is something that I've been talking about for a long time with the de-dollarization and all of the countries that are simultaneously selling treasuries and buying gold, because it's somewhat of a recent phenomenon where entities view government debt as an asset in place of gold. It's kind of going the other way around. But what I'm really getting at is that I expect this to accelerate. And the reason I say that is all the stuff I've talked about like last week, we talked about Saudi Arabia signing a swap agreement with China. And that means that they trade in local currencies to get favorable rates and sidestep the SWIFT, sidestep the dollar. And Saudi Arabia, I've talked a lot about, who has made admissions to doing everything from joining the BRICS, the Belt Road with all the other OPEC countries on the Belt Road, the Shanghai Cooperation Organization, the New Development Bank. But they told everyone in Davos that they would be open to taking other currencies for oil. Open. Well, the United Arab Emirates, the day before, now right now in the United Arab Emirates, they have a conference with 200 countries there represented on the United Nations summit for climate control, climate concerns, whatever, some woke thing that is in the UAE, and they have 200 countries there represented. And it's no coincidence that the day before, they publicly announced that they're no longer taking dollars for oil. They're the seventh largest oil producer in the world, who just alongside Saudi Arabia and Iran joined the BRICS. And it's interesting. I just want to read one comment. There was, much like this woke stupidity that we keep finding ourselves in, they have a panel there today or yesterday and it was called the She Changes Panel. And because evidently gender identity politics has a lot to do with climate change. And it was the former president of Ireland, her name's Mary Robinson, and she was talking about how bad fossil fuels were. Well, this whole summit is being presided over by the head of the UAE state-owned oil company. And he says that that if we completely eliminate fossil fuels in the near future, we will take the world back into the caves. And that there is no science out there that says that the phase out of fossil fuel will achieve the UN's global temperature goals. Right through it, right back at her. So what I'm getting at is that this endeavor that the world, the West, is embarking upon, not only is not well thought out, in the respect that the majority of all of the rare earth metals are found in the Eurasian continent and in Indonesia, and these OPEC countries, they're the ones who have it all anyway. And also, you have 80 to 85% of the world who's not doing this. And the United Arab Emirates is choosing sides. And while it's not as dramatic as Saudi Arabia and the rest of OPEC doing the same thing, it is a massive shot across the bow. And there's no coincidence. You have 200 countries there who witness this, that no, we're not taking dollars for oil anymore. You will wake up one Monday morning to what we saw Sunday night. The only difference is there will be follow through Monday morning, where the commercial banks will capitulate. Because the only way you can successfully manipulate a market over a period of time is to push it in the direction that it is going. And being naked short right now, I know you're going to show me how much was dumped onto the market. I know they dumped almost 13 million ounces of paper gold.
Gold has experienced a notable surge in the final quarter of this year, buoyed by a confluence of factors, including heightened demand for safe haven assets and anticipations of a Federal Reserve rate cut in the upcoming year. The outbreak of the Israel-Hamas conflict in early October initially propelled gold to the vicinity of its previous record of approximately 2,075 oz set in 2020. Despite a subsequent easing of tensions in the Middle East, gold has demonstrated remarkable resilience, capitalizing on a weakening U.S. dollar and a more dovish outlook regarding U.S. interest rates. The precious metal achieved a new record high in early December, and market expectations suggest that prices will likely maintain levels above $2,000 in the coming year amidst the persisting global demand for gold. Crucially, the Federal Reserve's policy stance remains a pivotal determinant for gold prices, with expectations of rate cuts in 2024 providing substantial support to the precious metal's upward trajectory. While gold-backed exchange-traded funds, ETFs, have experienced continuous outflows throughout this year, with a total global outflow of $13 billion and a corresponding 225-ton fall in holdings, a prospective resurgence of investor interest is foreseen in 2024. This anticipated return to net inflows is expected to coincide with the continued ascent of gold prices, especially as U.S. interest rates are predicted to decline. In essence, gold's recent performance underscores its role as a reliable, safe haven asset amid global uncertainties. The intricate interplay of geopolitical events, monetary policy shifts, and investor sentiments contributes to the dynamic landscape of gold markets. As we navigate through these factors, the enduring allure of gold persists, shaping its trajectory as a vital component in diversified investment portfolios. Now, we'll show you more clips of Andy Schectman talking about gold, but first, subscribe and turn on the notifications bell so you don't miss out on the best commodities videos in YouTube. Let's get it.
Years ago, some would say illegally in search of weapons that weren't there. And we're currently sanctioning 14 of their banks for trading with Iran to buy liquid natural gas. But they made all the money that they make in their oil revenue, they're not allowed to direct. It's held in an account in the New York Fed. And get this, 2022, they made $90 billion in selling oil. But 3-4 weeks ago, they asked the U.S., can we please have $1 billion of the 90 that we made last year? And the U.S. said, no, sorry. So on top of making it illegal, they also said if you own a business and you trade in dollars, you can go to prison and your business will be taken from you. They're the one country that I believe, when you hear everyone talking about currency revaluations like the dinar, I never really bought into it. And some of them I don't. But when you look at Iraq, who just said we would love to join the BRICS if we are invited, they're going to.
Yep.
They're going to join.
Be pushed into it.
And so when you talk about the potential for a revaluation, sure, it's possible. But this is a country that was illegally invaded, that we've occupied for 20 years, supposedly install a new regime, and we still won't let them touch the money that they make selling their own natural resources. And no, you can't have it. That the world is pushing back against. It is hypocrisy, where the West can do no wrong, and others that try and defend themselves, like Russia. And I'm not saying that Russia did. I'm not speaking about the Ukraine war, but what I am saying is that I think that if we had BRICS countries or BRICS military in Mexico, because Mexico's expressed interest in joining BRICS. So what would the pushback be if all of a sudden we had weapons and armies and nuclear weapons and all of these things just across the border in Mexico on behalf of the Russian and Chinese army? At what border? That's right. So my point is, I'm not making a judgment. I'm just simply saying the world will look at this and say, well, why did they get to make these choices? The weaponizing of the dollar was a massive mistake, as is telling Saudi Arabia and the rest of the BRICS we're going green. And since we're on the subject, and you said you think it's intentional, just Google Jared Bernstein. He's the chief economic advisor of the United States government, and his whole thesis is to lose the dollar's reserve status, that it is a privilege that is too exorbitant for us to continue to own. It creates too many distortions and trade imbalances. So you want to lose the reserve status? Well, weaponize the dollar, destroy your bond market because they recycle the dollars into bonds. How's that looking for them? And then tell the linchpin of the hegemony, Saudi, hey, thanks, guys, we're going green. So, yeah, I do think it is intentional, 100%.
What do you think of today's show? Are you staking gold like crazy at these prices, or are you just reaping the rewards and enjoying the fact that your P&L is on the deep green? Post in the comments section down below your total unrealized profit in gold. Thanks for watching the video to the end. You're the backbone of our success. Hit the like button, smash the subscribe button, and send this video to a gold bug that needs to add to his stack. And I see you on the next video.